nVidia real quick, though. Paul, give me a quick thought here. Yesterday, it seemed like the market was celebrating Jensen Huang ending his share sales. Does that matter?
Man, psychologically, maybe. I think the stock has been such a beast that it's really just consolidating right here within a range, and I think you'll probably see it, move higher into next year. They have a gross margin on the other end of the spectrum that Micron, their gross margin is like 75, 76%. It's really just a question of how much are they going to share with the Microns of the world, and maybe we'll get a little look-see on that with the guidance. But I said that's sort of a maybe kind of proposition. But I don't see the AI trade, slowing down. I think we'll get, Micron will kind of confirm that today, and that Micron really does have a product which is differentiated. It's not a commodity product. And I think they'll probably drag, companies up with them. But, you're seeing, things like 3 Mile Island get bought, utilities are going higher. It's all anticipation that this is coming down the pike. So I don't think that this is going to stop anytime soon. So I think it's good that the stock is consolidating. It gives it time to sort of work off overbought conditions and move higher.
All right, well said.
As the leader in artificial intelligence gets ready to launch its next-generation Blackwell processor series, NVIDIA is today's stock pick. According to the Santa Clara, California-based business, Blackwell product releases are scheduled for the fourth quarter. The Hopper family of data center processors, which made its debut 2 years ago, will be replaced by Blackwell. According to NVIDIA, Blackwell offers 5 times the performance in AI inferencing and 2.5 times the performance in AI training per chip compared to its predecessor. Blackwell, which NVIDIA Chief Executive Jensen Huang unveiled in March, is a processor for the era of generative AI. NVIDIA unveiled a series of Blackwell performance benchmarks ahead of the device's launch, showcasing its dominance in data center tests. NVIDIA's shares increased by more than 2% to 123.83 in early stock market trading this morning. Based on analysis, investors can consider the stock actionable after it cleared its high of 120.79 on September 12 and bounced off its 50-day moving average line. The upward movement broke a trend line that was pointing downward. Furthermore, using trading rules, NVIDIA's stock has created a handle with a purchase price of 131.26. Based on charts, that buy position is within a 15-week consolidation pattern, with a conventional buy point of 140.76. Stacy Rasgon, a Bernstein analyst, maintained his outperform rating and $155 price objective on NVIDIA stock on Monday. Ahead of the fourth quarter, Rasgon pointed out that NVIDIA's data center revenue is looking good. He added that NVIDIA's goals for gross margins make sense given the increase in Blackwell production. Angelo Zeno, an analyst at CFRA Research, listed NVIDIA, Marvell Technology, and Broadcom as his top picks for AI chipmakers on Tuesday. He has a price target of $139 for NVIDIA stock and rates it as a buy. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
NVIDIA shares rallied 4% today on reports suggesting CEO Jensen Huang finished selling 6 million shares of NVIDIA stock worth $713 million as part of a trading plan. Huang still holds around 70 million shares of NVIDIA in a personal account and another 786 million company shares through company trusts and partnerships.
Analysts at Mizuho stated in a report on Wednesday that they thought there was an unexpected reason for NVIDIA's 5% share price increase, which increased the company's market valuation by $13 billion. The company said that the rise happened as a result of a news article stating that CEO Jensen Huang had completed selling his stock, completing a strategy he had started earlier in the year. Although NVIDIA's stock surged, according to Mizuho, there was no meaningful news about the company's demand, margins, or the much-awaited Blackwell chips that could have caused the jump. Institutional investors, according to Mizuho, never comes up with concerns about insider selling of this kind. The tale, according to the analysts, probably encouraged both quant traders and regular investors to purchase, pushing Nvidia's stock upward. They clarify that the sharp increase demonstrates the influence that individual investors have over the stock's price movement, and Mizuho remarks that NVDA is easily agitated. Mizuho also focused on broader investor concerns regarding Nvidia's long-term growth, notably surrounding AI capital expenditures. According to reports, a large number of buy-side investors are doubting if AI capital expenditure in 2026 will be adequate to propel Nvidia's sales above the projected 21% rise for that year. Mizuho points out that a recent estimate by Bain Consulting indicates that the market for AI-related goods may reach around $1 trillion by 2027, with an expected 40 to 55% annual growth in AI services and hardware. The company thinks that this prediction may allay investor worries about whether spending on AI will continue well into 2025. According to Mizuho's research, Nvidia is still in a strong position for long-term growth, especially considering the optimism around AI investments and the fact that businesses like Microsoft are continuing to increase their expenditures on data center infrastructure for AI research. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's Climate Week in New York, tons of traffic and hundreds of companies attending dozens of events. The focus is on what else? AI. Diana Olick is at the Salesforce AI Climate Summit, joins us with the details. Diana, what is in the works here?
Well, look, Kelly, as we know, at its foundation, AI is a huge carbon offender because it requires massive data center capability. Data centers that require vast amounts of energy and water. But AI is also fast becoming a game changer in both climate sustainability and measuring climate risk. That was the focus of the Salesforce AI Summit.
The way that Salesforce thinks about AI and how we build products is we train on data sets that are very relevant to the industries that we serve. So whether that be an energy company or a healthcare company, we're not scraping data from the vastness of the internet, which requires incredible compute power.
Salesforce recently incorporated AI into its cloud program that measures its own sustainability and that of its clients. One of the companies at the summit, Altana, analyzes the entire value chain of companies from raw materials to consumption.
We then use artificial intelligence to stitch in point source greenhouse gas emissions data, life cycle models, and understand where there's sort of a heat map of carbon emissions in that whole global indirect network for a retailer, for a brand, for a manufacturer. And then they can actually use our platform to reach into that network for the first time and start to work together to decarbonize.
The Magnificent Seven stocks: Apple, Microsoft, Amazon.com, Nvidia, Meta Platforms, Tesla, and Google parent Alphabet, lived up to their moniker in 2023 with significant increases. However, their returns diverged in the third quarter of 2024, and the group as a whole saw selling pressure in the preceding months before recovering. Magnificent Seven stocks have a disproportionate impact on the market cap-weighted NASDAQ Composite and S&P 500 indices because of their disproportionate market capitalizations. Wednesday's 2.4% increase in Nvidia stock followed Tuesday's gains. The stock has an uneven handle with a buy point of 131.26. Investors may also utilize the high of 120.79 on September 12 as an early buy trigger and a much smaller handle. Nvidia has surpassed Wall Street expectations for its fiscal second quarter and raised its guidance for the current period in recent weeks. For the quarter that concluded on July 28, the Santa Clara, California-based corporation earned an adjusted 68 cents per share on sales of $30.04 billion. FactSet surveyed analysts who predicted profits per share of 65 cents on $28.74 billion in sales. Year over year, Nvidia had a 152% increase in earnings and a 122% increase in revenue. The AI behemoth exceeded Wall Street's expectations for its fiscal first quarter and guided higher than expected for the current period, which helped Nvidia's shares jump this year. A 10-for-1 stock split was also announced, and it went into effect on June 10.